Okay, good morning, everyone. I just woke up. I'm almost getting excited for what gold is doing, and as you can see, gold, like I told you yesterday, we should wait for it to enter J 5. And what can you see? We're seeing a bullish reversal chart pattern, which is a bullish ascending channel on gold. So, and I'm seeing a breakout happening already from 130. So you know what I usually do here, I go to my lower time frames to see the price action, and oh wow, this price action has been very lovely all the way from that major drop we had yesterday. Is it yesterday? I think Monday yesterday. So dropping to 1913, that was a major drop. And I love when a market is trending. As you can see, we were able to hold 125 back, we claim $125 back, and since then gold is trending. So as it stands, the immediate price action states that 90.25 must not break down. So even though I'm taking 100 pips stop loss right now, or 150 pips stop loss, I can start envisioning for entering gold, because this will be the point where gold must not break again, 1924, 1925 area. So why did I go far down to lower time frame? I like using my lower time frames to drive. So if I come back to maybe my 1 hour chart, you can see that gold has been holding this previous okay, let me go to the hourly chart. I told you that this was what caused the major break of structure. Hold on, maybe I should find the chart. Where is that chart? Okay, this was a major demand, waiting for a major resistance break and retest to enter from 1940. So from what you're seeing here, gold has broken out from this falling wedge already and came back, retested it, breaking up. So I need that fourth leg to enter, that fourth Elliott wave leg to enter. That's why I said everybody wait, because we need that. We needed this ABC move to the upside. We needed this A, retest the falling wedge, then break. Then we've gotten our ABC move. And the last thing I was talking about on, I think when we were doing analysis last week on Friday, I was asking everybody that what is the last thing you need to see before you can take a trade, even after 8 confirmations already. I don't know why people don't get this. You need to find a change of character face back to the upside. Let the 4 close above. You need a closure, not a wick now. Let this 4 candle that is opening, that's about closing in 1 and 30 minutes, close above this break of structure. As long as this candle remains like this, even though this is slight body, I need that body close, not a weak close. Once I can get that close right now, are you getting it? Here becomes our new area of demand. So anything that makes us come and tap inside this area of demand, this other block you're seeing, or if Fibonacci retracement levels, are you getting it? Just start buying. Put your stop loss below 1910. So calculate your risk. Put your stop loss below 1910, because tomorrow is Wednesday CPI. So they might do a joker to the downside, but as long as these whole demand zones will be holding it, are you getting this whole demand? There will be a lot of demand. So even though it comes and force and breaks it, are you getting this? What's it called? Now let me even delete this and show you something now. Every detail matters a lot in trading. I want to show you something. Watch. If this is a change of character now we're getting now, are you getting it? The most important thing, after, even though you have 100 confirmation, the most important thing you should wait for is a change of character back to the upside. Let the market switch to the upside. Are you getting? This is a switch already. So the market was coming down before. At least, this is a switch to downside. So as it stands right now, let me show you finally. As it stands right now, let the market break to the upside for you. Don't rush, don't FOMO. After breaking to the upside, let me show you 3 things that happened here now. Remember, I told you from previous last week that the market switched to the upside at 1912. Then it came and touched that 1930 to 1940 resistance, came back again, was able to hold it, and came back to the upside again, breaking above that falling wedge, but came back inside again. And what did you see after that comeback? I told you, once the market forms a wick, look at once the market forms a wick, are you getting it? This was a very, very bullish signal, very, very bullish signal. You see that wick? When it came back and touched the wick again, you see what happened? This 1912 area, there was a large order here that when the market was selling down, it bounced back again. That was the hammer that started this whole bull run. And that was when I was telling you guys yesterday that brace up, gold is doing some kind of force. So don't rush, because after that force, this area is a resistance area. After that force, what happens next? The market will try to start pushing to break above. Are you getting it? So 3 things that gave us a confirmation which day now, yesterday, was first of all, there was a support, a resistance now turns support. Are you getting? Secondly, this was a bearish pressure trend line from the upside. Are you getting it? We've broken above it, which is a falling wedge. Thirdly, this whole area of demand held. That means that particular area of demand held. If we can break above there, then lastly, we are getting a bullish reversal chart pattern. Look at a bullish reversal chart pattern that if it breaks and continues like this, the first target will be, let me see, just take this accumulation fees and put here. The first target will be our 1965 area of value. That's resistance, previous resistance. So if you're taking a trade right now from 1935 to 1965, that's 300 pips to the upside. So if you are risking anything, put a 100 pips to the downside, which is 1920. Oh no, that 100 pips is too small, because we might just come back inside. So we may use a 200 pips from 1935. Are you getting it? I'll drop the update now, 1935 to 1920. In case of no, but definitely, you know what I do, I don't mind even though it takes me to. So I'll use 1910 from 1935. Now it's 250 pips to the downside. So if I was supposed to use one lot before on my account, and for 100 pips, divide that one lot into 2 to 0.5 to accommodate 200 pips. Are you getting it? To accommodate 200 pips. Then if it still has 50 pips left, take 0.4 instead. It's better to be late than be late. You understand? It's better to earn little than gamble. And so what we'll be doing right now, because if this market, no matter what happens tomorrow, if this market breaks below this last higher low now, we will resume a downtrend. So if it's truly an uptrend, trust me, if it's truly an uptrend, this 1914 will not fall below. So we might just wait for a little retracement to 1934 and use a 200 pips so that I can use 0.5. Are you getting it? So that's a 200 pip stop loss. Now I have reduced my risk and money management from one lot to accommodate my 100 pip stop loss, and put 0.5 to accommodate 200 pip stop loss. So I'll be taking 1934, or I'm supposed to wait for a break above. Let this 27 minutes that is remaining on the 4-hourly chart part close. Once it closed, that's giving me, are you getting it, a mode of entry. So what do? I come back to my 15 minutes time frame. and follow the price action. What's the price action I'm waiting for right now? Just switch on the 15 minutes to the upside, then find a means of coming down to do an ABC move to the downside, because that a break is a break. Once after every major break, we do a quick ABC move to the downside. So whatever is happening here right now, break again to the upside, causing final switch to the upside, then do an ABC move to the downside. Are you getting it? To this break of structure, which is 1928 area, so that we can enter conservatively to from 1930 to 1965. Our new look at our new resistance at the top here, 1965. So entering from this area using a 200 pips, depends, you now start calculating your stop losses and every other thing to fit in. So you are not supposed to jump into any trade without calculating you can even enter from now. Look at the way it's as in the bullish. Buyers are stepping in right now because a lot of people don't even want to wait because they believe they have proper risk and money management in place already, even though because this market might just price in and continue to the upside like that. So even on the course of this video now, you can see that we went from 1934 all the way to 1937 right now. That's 30 pips is enough for a day as a day trader, a scalper. Are you getting? So I'm waiting for this, and gold is still bullish, so come switch back to the downside a little bit conservatively, but I'm going to start entering aggressively from now on because we have a switch already. We've broken out of an ascending triangle, so every aggressive trader right now believes that they have their stop losses below 1912. Are you getting it? So even though anything that wants to happen, they know they have 240 pips stop loss. Are you getting it? Even though tomorrow CPI comes down, take everybody that is having tighter stop losses out to continue going, no problem. So 240 pips, you lost $240, 0.1, no problem. You lost $2,400, 0.1 lot, no problem. You lost $24,000 on your 10 lot account, no problem, provided you know that your one lot will give you from here right now to 965 will give you about $3,000. Your 0.1 will give you, so you have to put a risk to it, but don't FOMO, don't let the market come to you, because after that break of structure, no matter how high it goes, let me go back to the 4-hourly chart, no matter how high this market goes, are you getting it, whether I like it or not, these areas are areas of, so this 1950 area are what caused this particular break of structure. Are you getting it? So definitely it must find some kind of supplies there. When this market was coming down, that was where that was a lot of supplies came from. So come there, come down, and hold this particular 1930 to 1935 dollar area again. Then you enter as a conservative trader to 1965. That is how to trade. That is how to trade. That is how to trade. So for we here at Vision X, we are not aggressive traders. Yes, I'm aggressive, but are you supposed to be aggressive? No, you are here to make money. So even though it goes, let it go. I guess it will give you a proper break of structure, a proper conservative entry again. What is a conservative entry? A break to the upside and retest of that broken structure. Are you getting it? Holding it, then you know that you have a proper mindset. Entering 1930 and 1935, put your stop loss at 1910, 200 pips, and take the trade. You can even leave it now because the market has switched. If you're a swing trader, you can take this trade, swing it to 1965. Are you getting it? Find the resistance, then find your previous resistance, now turn support, enter again, and let the market run. That is how market works. So this is a full analysis. So I think I was supposed to use, maybe it's too long for Telegram group right now, so I'll put it on YouTube and send what's it called, because this market is pricing it already, and send the YouTube link on the group. So this is what I have for gold, and this is what I'm looking out for. We are not much. We can enter aggressively with a lower lot size,
because that I call aggressive entries. What do I call aggressive entries? What do I call them? I call them gamble. But conservatively, you might not get an entry again. Are you getting it? You might not get an entry because the market might just get priced in and boom, 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 continue going to the upside. But I noticed that conservative trader tends to, have more peace of mind, tends to, avoid fear, tends to, have the mindset of investors, relaxation, and every other thing. Because if it goes, no problem. But if it comes back and give you that waited is more powerful than an aggressive trader. In the long run, you might even be richer than an aggressive trader that is making money all the time, and you are missing trades because your capital is saved, your mindset is saved, everything is saved. So don't let me talk too much. Let's just wish that we have a break and retest, no matter how long it takes. Wait, because we've been waiting all the way since June, 1st of June, I think, or something. No, we're waiting since the middle of June, I think, for whatever is going to form. If it's going to be a what's it called? Previously, it was a head and shoulders pattern, but right now, because of this particular leg, it switched from a head and shoulders pattern to an ascending triangle. And I don't know go to be doing ascending triangles, break and retest, but I don't know. What I know go to do is probably a W pattern. So if you can still call it a W pattern, no problem. If it's called a W pattern, no problem. Are you getting it? You can still name it as a W pattern. So this is how to trade. Let the market come to you. Don't rush into the market. Are you getting it? So we are able to get to 1900, and 1900 demand zone held since last week. So if you are in 1900 demand zone entry, sniper entry from 1900, 1900, congratulations, you are 360 pips up already. And we that don't have that power to, without finding a switch to the upside. So a change of character has given us, number one, internally market structure and price action pattern. What's it called? W pattern, or your ascending triangle, where the market is not breaking below anymore. Are you getting? We are not breaking below anymore. That's another confirmation of a switch to the upside. So I dropped all the confirmations, 8 confirmations I was able to find on the Telegram channel. So you can go to our Telegram channel, Vision X Limited, to find those confirmations and learn how to trade properly. Are you getting? So this is what I have for you guys, and I'll be very, very happy to see us breaking all these areas of value from now on to the upside 1980, and take us all the way to take us all the way back to our all-time high of 2050. That's from here right now is about 1100 and something pips to the upside. Are you getting it? So we definitely, if we switch back to the upside, it will now coincide with our with our hold on, go to our daily, to now coincide with our break of structure, because definitely gold does what fake out, and this was a previous support that it broke to the downside. Right now it's finding a way to go back to the upside, which should correspond with our uptrend break and retest. So if you bring your Fibonacci retracement tools in, you will see that we retrace from 0.5 0.618 Q zone. So if we are breaking above here right now and this market is continuing to the upside, that's telling you that gold has resumed uptrend. What's it called? A break. After every major break, what happens? Let's drive. After every major break of structure, what happens? We do a change of character to the downside. And when the change of character is happening, what happens? We need a sluggish move, not a very, very large candle come to the downside, in which that sluggish move entered into a descending falling wedge, and it was very sluggish. It took all the way from I think April all the way to, you know, July. Right now, how many months? That's about 3 months or 4 months to happen. So for that reason, this market is about reversing and doing another move to the upside. So you know what I usually do? Long term, I take this off. Long term, if this is indeed a change of character to the upside, are you getting it? We bring our Fibonacci trend extension in. So we enter is a one lot from here. Are you getting it? Bring our Fibonacci trend extension in and tell us where it's going to get to. And you know what I do here at Vision X? My first take profit 0.618, my second take profit at 0.786. So if I'm entering from here right now, I'm taking a long 1,140 pips, one lot trade to the upside, which is about, I think, 14,000 or 14,140,000. I will calculate that out. I think $14,000 from here. Are you getting it? If it's a one lot trade, a 10 lot trade, 140,000. I don't know. I'll calculate that out at OctaFX, my OctaFX calculator or my FX calculator. So long term, I don't care how long it's going to take. The moment to switch back, long term, this is a 1,000 pips trade coming for me. Are you getting it? Then there are a lot of confirmations that is telling us that this market is breaking to the upside, because if this was a breakdown, why was the market sluggish, breaking down again? I guess so we might still break down, so watch out. That's why I said wait for a proper break of structure and retest on your broken resistance. Are you getting it? Wait, let the market break properly and retest for you to enter. As long as it's a higher time frame, it will definitely break to the upside and retest, so that when you enter conservatively, you can even leave that trade to run for as long as you want to, you know, maximize your profit. Without that, the market will be more scary to you, even though it's showing you a sign of, you know, reversal to the upside already. A reversal to the downside might still happen, because overall on the higher time frame we are still bearish. So this whole area might just be a retracement to continue to the downside. So for it to actually tell you that it has switched, come up, retest that broken structure. Are you getting it? And find it maybe 1 hour, 15 minutes, 30 minutes, switch back to the upside. Are you getting it? A lot of people don't even enter until we come back with this major switch on the value on the daily, then enter conservatively to start going. Are you getting it? So this video is becoming too long because of people that wants to watch and understand whatever is happening. This is just trading for you. It's as simple as that. The power to wait as a swing trader, and the power of a focused mindset as a scalper, not a day trader. I don't know why people day trade, because if you are day trading, that means you'll be taking 1, 2 to 5 trades in a day, where your profit made in 1, 2, 3, 4 trades can be wiped out with just one trade. Because if that was the case, you see this scalp trade of which day, maybe you are entering, you've entered this trade here, just imagine you didn't put stop loss, taking all your, maybe you'll be guiding 20 pips, it will now take all your, in just one trade, 200 pips will just wipe it out and you'll be in losses. So take 1 or 2 scalp trade in a day, get out of that particular trade, get out. Once you get out, wait for what is going to happen next, look for a proper structure the next day again, take 20 to 100 pips again, get out. Are you getting? That's how to trade. So this is what I have for you right now. Upload on YouTube and send to my students, and I'll be wishing you a very successful trade starting from tomorrow, after the CPI event that will happen tomorrow. Okay, take care and bye for now. Bye.